What is up, people? Miles here with Keep the Change, and today we are talking about an insane growth stock in the gambling industry that just went up 3% after hour. Its quarter 3 earnings just came out, so we're going to be doing a deep dive into that, seeing what they got going on for them, the good, the bad, and the ugly. But before we get into that, I just need one favor from you guys. Just leave me a question down below. I'm doing a 100 subscriber Q&A, so it would really help. I need some more questions, so just leave me a comment down below. But with all that being said, you guys, let's get right into the video. The stock we're talking about is GAN stock. Now, GAN stock actually, after hours, reported their earnings, and they were a mixed bag. So when the earnings first came out, they were at $18 a share. They took a dive down to $16 a share, so down 8%. They have a market cap of around $500 million, and since they're not yet profitable, we don't have a PE ratio. However, they have a price to sales ratio of around 15-16. So GAN basically makes software for casinos. So basically, if I'm some random casino, let's call me Muckleshoot, okay? And I realize this whole pandemic is going on. People aren't going to casinos as much. There's shutdowns, there's lockdowns, a lot of stuff's going on in the world. I realize that I need an online presence. So basically, I go to GAN, I say, hey, I don't know how to make an app, but I have a bunch of customers and a brand name. GAN says, cool, we'll give you our software. All we ask in return is a small piece of that pie. So now my casino has an online app, people gamble on the app, and then GAN actually takes a fraction of what people pay to the casino on the app. So if someone bet $100, GAN would take like $1 or $2 just because they provided the software. Now, online gambling in the US isn't completely legal yet. It's still getting legalized all across the country. So basically what this means is as the years go on, more states will legalize online gambling and there will be billions of dollars in gambling revenue. However, at the moment, it's a lot slimmer. Not only do they do online casino apps, however, they also have their toes in simulated gaming and sports betting. So basically sports betting is also going online slowly. So looking at the third quarter 2020 for GAN, they had $10.3 million in revenue, which was up 23% quarter over quarter and over 84% year over year. Now, I said 23% quarter over quarter. The reason that's so important is the fact that people think 20% growth is very high, and that's just quarter over quarter. That's not year over year. That's the big differentiator there. But the sad news is that this company is not actually profitable, which I have an issue with, but we'll get into it. So basically, they lost $4 million this quarter or 14 cents per share. And analysts actually had them making 2 cents per share this quarter, so they expected them to be profitable. They weren't, which is obviously a big problem. I think this is a reason that the share price went down like 8% after hours. People thought they were going to make money and they didn't, so that was disappointing. So if everyone was under the impression that they were going to be profitable this quarter, then where did the money go? What happened here? If you look at the revenue sheet, they had over $10 million in administration expenses. Administrative expenses cover a whole range of topics, but mainly it's basically their growing staff count. So obviously they're hiring more employees as they're growing their business, and then also share-based compensation. And share-based compensation is basically like the CEO will take a lower salary in order to reinvest the money back into the business. However, once the company goes public, they actually sell their shares in order to make some money. And that's been a really big expense for them in 2020 with over $6.8 million worth of share-based compensation expenses. Now, share-based compensation is going to end in 2020, so those expenses should go down. However, they are saying that they're going to have some relatively high expenses in the next quarter and in quarter 1 of 2021. However, after all that, in the second quarter of 2021, maybe third quarter 2021, we should be able to see a track to profitability, at least a lot closer. Now, we're going to have to keep an eye on that. We're not too sure, but obviously I'm very hopeful and optimistic for that. So average revenue per daily user actually increased year over year for the quarter, which is a really good sign. However, it was down quarter over quarter, but you've got to consider there's less people playing, considering the fact that, there's less lockdowns. I mean, things were open again. And if we look at where the revenue actually is coming from, most of it is coming from the United States. I mean, you have a little bit in Italy and the rest of the world, but they are very US focused. They're very exposed to the US market. Now, in terms of market segments or where they actually earn their revenue from, what business streams, let's take a deeper look at that. So simulated gaming made up over 24% of their overall revenue for the entire quarter. Now, you may be asking yourself, what the heck is a simulated gaming? And I'll tell you right now. Basically, simulated gaming is where you buy virtual currency in order to gamble. Now, you may be asking yourself, who would do this? That's so stupid because you can't actually cash out. You can't actually make any money. And the advantage of this is that GAN actually has a patent which basically links offline casinos with the online apps. And all this means is that if you have a rewards card for a casino you go to a lot, basically you can hook it up to your online app. And if you spend money through simulated gaming, getting the virtual currency, you can actually earn real life rewards. This could be anything from free hotel stays to maybe free drinks at the casino, free food, you name it. This is actually something that made Wynn Resorts look into GAN, and now Wynn Resorts signed a 10-year deal with GAN. So GAN's going to be their app provider for 10 years. 66% of their revenue came from real online money gaming. So basically people putting money into blackjack and poker online, but it's real money. So obviously that's their biggest market segment. And then they had 10% of their revenue come from sports betting online. Clearly, sports betting is pretty much the smallest thing going for this company at the moment. However, that's all about to change with one big announcement they made this quarter. And that's the fact that GAN is actually about to acquire a whole nother company called St. Vincent, or more better known as CoolBets. And you and I probably haven't heard of CoolBets, assuming you're American, of course, because I'm American, I'm super biased. So CoolBets is actually a sports gambling app in Europe and Latin America. So what GAN actually did is realize they're kind of behind in sports online betting. So what they're going to do is they're going to buy this entire company outright in cash and stock. And basically, they'll have exposure to Europe along with Latin America, and then also they can bring the app to the US as well and then gain share in that country as well. So this was a great move because obviously they're increasing their exposure globally, so they're not going to be so dependent on the US market, which is kind of a good thing. Also coupled with the fact they're going to try and get a gain with online sports betting in the US, which hopefully will lead to more partnerships and more money. The acquisition should be done by the end of Q1 2021, so that's actually relatively soon, within the next 6 months or so. And CoolBets is actually going to bring $50 million to GAN in terms of revenue in the next year. So that's actually crazy because GAN right now, this year, they're going to make $40 million, add the $50 million from CoolBets, and you have a company that's about to make over $100 million in revenue with a $500 million market cap. Now let's talk prices because buying something isn't free, and GAN is about to pay a very, very hefty amount. So they'll give $95 million in cash to CoolBets, and then they'll actually give some shares to them as well, which basically all that means is that CoolBets is going to own some GAN, even though they're kind of the same company at this point. Kind of a weird thing. But if you look at the balance sheet, even though it is extremely healthy, GAN only has $57 million in cash. And although they have no debt, that's obviously not enough to pay $95 million. So where's the rest of the money coming from? And you guessed it, baby, they're going to issue more shares. On one hand, this is kind of good, okay? They're issuing more shares in order to acquire a whole company and progress the business. I mean, this is going to get them on a growth track that is almost unbelievable. You know, I was expecting $100 million revenue in the next 2 to 3 years. Now they're going to make it basically next year guaranteed. However, this does also bring up a big issue, and that's shareholder dilution. And all this means is that they're going to issue more shares, which makes the shares outstanding now kind of more worthless in a way. So that $18 stock price could easily go to 15, maybe even 10. But I'm telling you, if this thing goes to 10, I am going to scoop it up, okay? I'm going to eat it like a fat kid eats cake. Because at the end of the day, they are in an industry that is growing massively year in and year out, and they're a leader in it as well. They're providing a bunch of software to big casinos. They've got a bunch of partners. They're purchasing companies, which is absolutely crazy because a couple months ago, my thinking was that if anything, GAN would be the company to get bought out, not that they'd be going and buying other companies. So that just shows you how much they believe in the company, and in this stage, they're actually in the growth stage. So basically, they're trying to get their company as big as possible, and this move is definitely one that is going to help it a ton. Now, what's interesting to me is that they said the real profit is coming from like casino gaming, not sports betting gaming. Like that's not really going to be as profitable. So I don't know why they would go and purchase a sports betting company, but in the same sense, the revenues there are insane, okay? And they're almost at break even already with that company, so hopefully coming together, they should be somewhat profitable. So this is a company that's younger, they're hungry, and I mean, you could just tell that this has a great team behind them and a great company culture, and I think that this stock price is going to go insane in the coming years. I think we could potentially see $50 by the end of 2022, and hopefully $100 by 2025, but that's kind of a pipe dream, I'm not going to lie. However, with the rates they're growing, I mean 80 to 100% growth in terms of revenue, that's absolutely crazy. That's like unprecedented. Their share price should rise dramatically. The biggest thing to focus on for this company in the coming year is how profitable they are after the acquisition. I want to see Q2 2021. That's what I'm really excited for personally. However, if you're looking into buying this company, I would start right now because you never know. The share price could go insane way before anything actually materializes in terms of the business. The stock price could go down due to them issuing more shares, and the balance sheet probably is going to take a hit from this. Maybe they don't make as much profit as people think they will, but at the end of the day, this is a huge revenue growth stock, and all you need to do, put some money into it in 5 years, hopefully this will go up. Now, I'm not a financial advisor by any means, so don't listen to me. Do your own research. But yeah, I love this stock. I'm gonna hold it for a very, very long time, and I'm not planning on selling anytime soon. So thank you guys so much for watching. It means the world to me, and love you.